What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we will go over the overall market, cover some hype sectors, hit you with some trade zones, update you on some prior trade zones, and that's pretty much it. So let's get into it. Okay, so we'll start off with SPY here. So if you'll recall from last week, we were discussing for the potential that this was not going to follow through because it just kind of looked too good to be true. And the buyers had so many opportunities to advance. Let me just get this out of the way. And the buyers had so many opportunities to advance and failed, right? They popped over the value area high, failed, popped over the value area high, failed, popped over the value area high, failed, popped over, etc. So if these buyers were going to get going right off of the jump at the beginning of this week, after closing 2 Fridays ago really strong near the highs of this local consolidation, they should have had a nice strong open and then got going. So that was our first early indication that the breakout was not going to see follow through. And when you do see that, right, when you recall, again, you can just go back to last week and check out what we were talking about. If you see a higher high that lacks follow through in an area of balance, what you should expect is for the sellers or the opposing side to try to respond in kind. So if you see a breakdown of a low and then no follow through, the buyer should try to take price to the other side of the range, the highs. If you see a break with no follow through on the highs, the seller should try to take us to the lows of range. That's just how balance has to work. It's like a seesaw, right? If not this way, then this way, right? So there's really no other way of looking at it, in my opinion. You see this kind of price action all the time. Market profilers, volume profilers will call it like a look above and fail. So that's what we were looking out for last week. Despite the fact that buyers were positioned really well, we were looking out for that. And I just want to really quickly just show you what it's like to be part of our community. Because in our community, here's the Tuesday open. Every single morning for the futures room, at least, I'll be there. We'll do a rundown. Obviously, other parts of our team, do rundowns for other sectors. But with the fact that we opened, let's see, so exactly I'm talking about pop and drops where the structure's value area high and now set to open near the middle of local daily balance after a strong close on Friday. So means that eyes again on the lows of the range to see if sellers can respond in kind. That's their objective after a look above and fail. So, we like to think trading is a team game, right? Because we have 1,000 eyes calling things out. So if you're interested in joining a community of full-time traders, check us out. Links in the description below. If you're watching this on some other platform, not YouTube, then chartguys.com. Check us out. We're here day in and day out. So anyway, now that the breakdown has occurred, recall what we were talking about last week. What are we gonna consider healthy consolidation, right? So we know that on the weekly time frame, there's still a good amount of time, space over 510.27, this low over here, to set a potential weekly lower high. Higher low. We could say that this move down, right, was trying to negate this structure and it failed to do so. It traded through it and popped back above. So now what the buyers should try to get done if they want to remain constructive is just to hold over this guy over here. And that's this structure. That's all of this over here. So we're eyeing this guy because the best case scenario would be for the buyers to continue to hold over this local demand from July 24th to August 1st. You can see there's a good amount of volume that was traded here. So to cut through this entire structure is not the best look. And because you had a bunch of balance here across like roughly 3 sessions or so, it's not the entirety of this session, but the latter half of this session, and then these 2 sessions were very balancy. It cooled off the hourly RSI such that we didn't really get that extended once we were coming into this key spot. Okay, so the sellers are doing a pretty good job of stepping down right now, right? Lots of consolidation, breakdown, consolidate your gains or retracement, and then follow through with some more selling. So what we're looking at now is, and you can see where price pretty stalled, right? It stalled and closed right at the value area low of this structure, right? So the structure right now, its significance is continuing to be affirmed. Whether or not it holds as demand, we shall see. I would have preferred to see way more extension here before looking for plays into our trade zone. Into here, I still think it's a reasonable area to be looking for these buys for a potential weekly higher low, because remember, it's just designed around holding this structure here. And the volume really picks up right here. So if they were to trade through this high volume area and this high volume area on one leg down without any kind of bounce, that would be really notable selling, and that would significantly increase the potential that we're just kind of looking at a bigger picture, sideways kind of price action. And if that's going to be the case, then as long as we're holding over this 2021 high, it's not really that big of a deal, right? Remember, the market can trade sideways and still be constructive if it's still over another area of demand. So this is our key demand zone right now on a much higher time frame, like the 3-month time frame, if we're looking at it like that, right? This was the 3-month breakout, and as long as we're over this 2021 high, well then the 3-month breakout has not yet been negated. All right, so that's pretty much it from a daily perspective here. Now we do have space for a daily lower high to be set under 564.20 upon any bounce. So we do have to be mindful of that. I would not be surprised if the sellers are waiting for another test here to have another go at it and defend all of this supply, which is kind of what happened here on the Wednesday session, right? They pop up, get really close to that prior low here, or to that low, and then fail to get back above. So very notable. That is pretty much it. Still think this is reasonable, but you want to be taking your plays when the hourly gets beaten up, and so it only just started getting beaten up while also being in the trade zone. It was hourly oversold in here, I believe. Not really, actually. It didn't quite get down there. So now is the time when we should be considering looking for some position. Yeah, in my opinion, if you're looking for that weekly higher low, it's reasonable to be starting to look for that. And I probably will be looking for that next week, but probably going to day trade it. Look for a day trade that can potentially turn to a swing. I'm trying to be more selective these days with the futures. But you know what? Let me shout out David real quick too. Hold on, let me find this. Let me just bring that back here. So again, a community of like full-time traders, and I really respect David for putting in the work. He has been a member for at least on and off now, probably 3 to 5 years, something like that. And I think for a while he just things weren't clicking, but now I really see a lot of progress, and I think it's really awesome. So here is David, one of our members, 9:33 a.m. This is today. This is Friday. So we were talking about the potential of sellers, right? Sellers are still very confident here, and in the morning session, I was talking about the potential of a sell in the NQ being reasonable if you can't find acceptance over the prior day's point of control. So let's see, I think it was something like this. Sellers are positioned well to move value lower as long as YPOCs are resistant, need acceptance under that, blah, blah, blah. And acceptance under the YPOC would increase the odds of a fast daily lower high being set, right? And so I believe David uses these references quite well. He says, I was only open to the YPOC area because of the no tag of the overnight high early on. And so what that is just on the NQ here. Sorry guys, I didn't expect to talk about this. It just occurred to me that I just wanted to give him a shout out here. But here we go. We talked about this in the morning stream, and so what happened here was, and this is really great look from David, no test of the overnight high, meaning that the overnight buyers were not being affirmed. And then you roll back down under the point of control of the prior session. So that's pretty much the go sign for the sellers. The cash market is taking over. The sellers are taking over the cash market, I should say. And again, on the daily time frame, this is what was happening. This is what was happening for the QQQ, right? We had 2 prior sessions pop and drop over this key backtest of this point of control. It's just a great day trade. And on the and it was honestly a banger, right? And on the ETF chart too, you pretty much open right at the value area low. So you know that if you're going to reject from the value area low, not come up to this point of control, their next objective should be this value area high and this point of control, right? That's just this structure, the next reference over here. So shout out to David. I respect how much you've been putting into the grind, and that's it. Raccoon life. Okay, so anyway, let's get back on track here. That's pretty much it for the SPY, honestly. There's nothing really more to discuss, so let's move on to the Qs here, which I guess this would have been a better time to talk about the Qs, to shout out David, I mean. But anyway, Qs showing you a lot of relative weakness right now. So we're currently coming down to test this structure over here. Hold on a second, this chart's marked up better. This structure over here from 222 to 412, super key. If we zoom out, this structure is this guy, right? It's this guy right here. Okay, so this is probably the most significant area of balance that is over this 2021 high. So you can see that you break down from this area and they flirt with touching down on the 2021 high and they fail. Then you get a big old rally, a back test of this area, drop and pop under it, and then space for a weekly higher low over 423.45. So, I mean, think about that, right? Like, this is kind of like a mini boss. This is the big boss for the sellers, right? The sellers need to get back under here to say, hey, listen, we just negated this major breakout. This is like the mini boss, right? This is like, oh man, what's his name? Vega before M Bison. I'm dating myself. Right? Here's M Bison. Here's Vega, right? Or is it Balrog? It's Vega, I think. Anyway, that's what I'm looking at, right? So acceptance under this 222 to 412 structure would greatly increase the odds of a test of the 2021 high, and then breaking the 2021 high would be a huge red flag for the buyers. But as long as you don't find acceptance under it, that would still be okay. And you can see how there's a lot of volume over here. So if you get a situation like this where you drill under it, but don't find acceptance under here, find support over here, pop back above, that's still going to be pretty constructive, right? You can see this in like Apple. Apple did this kind of a dealio recently, where here you have this very, very clear area of sideways. You break above it quite a ways. You want to hold above this structure, ideally, to be the most constructive, right? Oops. To be most confident in, hang on a second here. To be most confident in this structure acting as a man, you come down and break under the high, that's a red flag, but you get caught right at the value area high. It happens again, you get caught right at the value area high, and then finally you get a more meaningful breakout. Right? And then again, here's another example of that, right? So you break back down under this high of all of this prior demand, but not really that much acceptance. All right. So while this may have, if you're a day trader, this week probably felt like a lot of damage occurred, but not really. Bigger picture. Okay. So I still think this is reasonable. Again, the hourly extension didn't really occur like near the highs of this trade zone. So you probably only, if you're using this trade zone with hourly extension, you probably only have like maybe a fill here, maybe you chopped and stopped it, or maybe you have some here, you have some here. I would lower this a little bit, right? Ideally, you have more risk, capability or risk allocated for that. But I would just, save your last scale or whatever for a little bit deeper, maybe like down here. It shouldn't affect the trade that much, something like this. And again, that's just because the hourly didn't get quite extended as I intended or as I thought it might if it were to be a straight shot because of this balance here. So something like this is not really that big of an adjustment. If you don't have risk capital for that, it is what it is. Then I guess you would have to stop it out. But I think it's reasonable to make a bit of an adjustment here. I'm going to be looking for buys next week, right? If things get really beaten up here, I would actually rather like NVDA. So we'll talk about that later. But anyway, this is the key structure. The best case scenario would have been to hold over this guy. Obviously, they're not doing such a good job of that. The low of our original trade zone is off of the high of this structure. That's why we have it designed as such. So that's really it. So daily trend is bearish, lower highs and lower lows. Key lower high resistance is 465.36. And again, great job, David. You smashed it. So that is pretty much it for the Qs. Moving on to the Dow here. So the Dow, another higher high lacking follow through is definitely not a good look. So these buyers want to do their best to hold over this guy. You can see how this guy was problematic for these buyers over here. They try to hold over it and fail, fall back down, hold this local demand. It's problematic over here, They finally break above it. Holding over a back test of it is a good look. Lower high, no follow through, drill down through there. Don't get back down to this local demand. Big old pop, space for a weekly higher low like everybody else. Anything over 384.93 is going to be good for one. And really you just want to stay over these prior highs here, right? So if we bring back our structures, this is what we cared about, right? The trade zone right now is based off of the potential of holding over this and holding over this because we don't want to enter all of this chop over here, all of this demand. All right, so I still think this is a very reasonable trade zone. Again, it was very back and forth on the way down. It wasn't a flush, and so hourly is not yet going to be beaten up. But I think once it enters and a test of this 401 area, then you probably will have hourly extension at that point. So we shall see. Is the FOMC meeting next week? No, I think 2 weeks from now. I think it's the 18th, right? Yes. So that's pretty much it. I still think Dow traders, this is a very reasonable area to be looking for that weekly higher low. It's kind of just a trend line as well too, right? Like just mark it up over there. I guess it's not perfect, but I still think it's good. I mean, this is where you want to take the plays if you're looking for the buyers to be as strong as possible, right? Because again, you want to hold over these guys. Don't come into here. Okay. IWM. So IWM, not a great look now, right? So you can see how IWM. Hold on, let me just get this out of the way real quick. I still maintain this is a very reasonable area for trade, but again, similar situation where you didn't really have hourly extension because of how orderly, I guess how much back and forth there was. Maybe not orderly being the best word, but you can see how the hourly really only got extended over here and over here. And here you're not really at the lows of the location yet. You're not at the value area low yet. So because you had all this kind of choppiness here, things didn't really get beaten up yet. Now they're starting to get a little bit beaten up. But I still think this is absolutely the key spot, right? Because if you're under here, right? If you're under this guy, where the high of the trade zone is, where the middle of the trade zone is, then you should expect this. So over this, we should expect this. Under this, we should expect this, right? And that's exactly what happened over here. So this is do or die time. If these sellers again crack back under this 2021 structure, I'll just change my tune, right? Like it's, trading is about being flexible. I'm not just gonna stay married to an idea. If you trade back down under this 2021 structure here, okay, then it's right back to looking for sells, targeting this guy, which is exactly what I did in here. All right, it didn't stick, but that's just the direction that you have to go with because that's what the market is telling you is trying to get done. Do we know that it will successfully do that? No, right? But that's what the market is telling us right in our faces, right? This is market generated information, right? These are all market generated references, which we're making our decisions off of. So that's pretty much it. Space for a weekly higher low here as well. Anything over 196.70 is going to be good for one. And again, this was a probe, right? Here is some demand that they create, a breakout of the demand, drop and pop into the demand zone, right? Drop, pop back over it. And so now if these buyers are going to stay constructive, they want to hold over this area. So I still maintain that this is the reasonable area to be looking for trade. But I'll probably focus on something else next week. This is one of those situations when everything is moving together, it's going to be tricky to trade multiple things. You typically have to prioritize. So I'll get into that soon. Space for a daily lower high, anything under 220.98, it's going to be good for one. And if we do bounce from here, but we get caught up right here at this value area low, the value area low of this 2021 structure, that's this guy over here, that would be a pretty big red flag for these buyers. Alrighty. That's it. Moving on to the dollar. So the dollar, if you'll recall, we were just looking out for this trade zone is looking out for all of this to just continue, right? We are looking at balance. And whenever you're looking at balance, you just want to look to your left and see, okay, what structures are dictating this balance? Because that's where you're going to have good value trades, right? So as soon as this low is made, as soon as this high is made, as soon as this low is made, you look to your left and you think, okay, it's these guys, right? And so that gives you opportunity here, 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 and now potentially over here, right? It would be very notable for the dollar to break out of this like multi-year EQ to the downside, okay? So the more likely scenario is that we just kind of continue to balance in here, right? Because typically, before you get a breakout, typically you'll see some like narrowing, right? Some tightening up. So if you do start to have an inability to get back over this daily no change level, 101.965, okay, then we would start to be pretty concerned and look for the potential of a breakdown. So far, it actually looks pretty good for that, right? Because as of yet, excuse me, still a little sick. As of yet, still no acceptance back over this daily no change level. They didn't even test it 101.965. Instead, they're getting caught up over here, the lows of this guy. So that being said, you did have a pretty notable bounce without touching down on this value area high, right? It's value area high of this big guy. So that's really it. There's really nothing else to talk about because the dollar hasn't created any change by getting over the daily no change level or by breaking down under this demand zone in the last week. All right, so stick with it if this is one you took, and ideally if you're going to initiate more position, like maybe at this point of control, wait for these things to get beaten up. All right, I think this was probably that was probably hourly oversold considering this move. Let's see. Yeah, right, and even here it was hourly oversold right off of that location. So that's pretty much it for the dollar. Moving on to the VIX. So the VIX, it looked like it was flirting with a breakdown back under here, but apparently not. And so now the VIX is climbing a bit here, obviously with the week of volatility that we had. Daily higher low is trying to be set here at 18.83. It's both a higher low and a higher high, so I don't really, I don't really want to say that it's a trend change. Not that we really even monitor price action trends for the VIX. All that I care about right now is that we're still over this guy. So this is an elevated environment, and you can tell that if you're a futures trader, right? Like now you have like 1 minute candles that are like 30, 40 points. I think the opening candle was like 30 points. Holy crap. Oh, that's a 5 minute. That's why. Yeah, that would have been wild. The opening candle was 43 points. That's a lot, you know? So elevated VIX means that, if you're a day trader, you want to diminish your size a little bit. And that's pretty much it. You just have to make adjustments for the new volatility. So that is it. Okay, so NVDA I think, is the one that I'm going to be focusing on. Normally I focus on futures, but lately I've been realizing that it's easier to hold shares, and the longer that I trade, the more my trading looks like portfolio management. It sounds super lame and boring, but it's just the reality of it. But so, um, yeah, so I'm interested in this because we actually have never had daily oversold conditions. Not never, I'm sorry. We have not had daily oversold conditions in quite a long time. I marked it up. I think it was here. September in 2022 was the last time that the daily actually did get oversold. And it was kind of similar, where you built this demand zone over here. So here, I'll just mark this out right. Here's the first time that you get daily oversold. It's over here. There. Let me just make sure. Nope. Over. Yeah, pretty much right there. Okay, so last time that the last time we had daily oversold, we had this big old area of demand, a big old rip out of it, and then boom, a back test of this area of demand. And if you look at what we're doing right now, you have all this demand, a big old breakout out of it, and if we were to lower low into this area, you would have the first daily oversold conditions again while testing these key structures. So if we just look back at what happened, right, as a bit of a comparison, it didn't mark the low, but you did get a really great reaction off of this point of control, probably good enough for a little bit of a chop and stop. Yeah, a chop and stop. Chop it up, stop up the rest, and then you just gotta stay frosty for this, right? And know that, okay, well, this is the key demand zone. So even though this isn't the play that stuck, the first daily oversold conditions at this point of control, it did give us pretty good indication that things were starting to look for a potential turnaround, right? As long as we don't find acceptance under here. So seeing this move down under the low of this structure, not have follow through, and then move back over this point of control, start holding back test of the point of control, then pop above and try to back test the value area high, there was a lot of opportunity here. So I'm probably going to look next week if we get daily oversold conditions in NVDA. I'll probably do like a risk reversal style, right? I'll start off with shares. I'll sell some cash secured puts, and then if the cash secured puts are designed to just lower my cost basis, right? So I'm kind of like reserving shares at a price and collecting credit. If I don't get a sign, then the credit received reduces the cost of the shares. And if we continue to drill lower and I no longer want to take assignment at that cost, at that strike, I should say, I'll just roll it down, right? Because this is a position that I've been working for years anyway. So, and I've been selling on the way up. So I'm just looking to get back to size. And I personally think like many of the names that have seen AI pumps, they're not making money yet with AI. Like there are very few companies that are making right now. AI is a cost for many companies. Excuse me. Something in my throat. Yeah, AI is a cost for a lot of companies right now, right? Because they have to buy, they have to spend right now to implement these services. They're not really seeing revs from it yet. Whereas NVDA is not like that, right? NVDA is already seeing benefit from this AI. Let's call it a, I don't know, let's call it a wave. This AI, this wave I. Yeah. So AI, AVGO, PLTR, like these are some companies associated with AI that are already benefiting from it, So because NVDA has the hardware, right? All you're pretty much if you're entering the space now, you pretty much have to play with NVDA, right? So anyway, that's my opinion. That's well, that part's not opinion, but that's what I'm looking at, and so that's really it. And it looks like these guys might all get extended at a similar time, like simultaneously. So that's pretty notable to me. Anyway, do we do trade zone? Yeah. So something like this, I still think is very reasonable. This was actually set up from back here, you know. So if you've already worked this position here, bounced, probably chopped it up now. Even if you break down to this low, you could stop by your position if you want, or you can look to work a new position because things are extended again coming into this key demand zone. It would be a big red flag for the sellers to trade through this big old demand zone. Hasn't happened in a while. Has not happened in a while where NVDA traded through a major demand zone. It was back here, right? So here you build demand, break out, back test, hold it, get caught at supply, and then you trade through it. So was it back in 2022 was the last time where there was really major demand broken. So that's pretty much it. Okay, and then that was obviously led to the 2022, right? Where the down year that we had. And then ever since then, it's just been demand, breakout, demand, breakout, demand, breakout, demand, breakout, demand, etc. So it would be very notable for these sellers to trade through this guy. It would be a big red flag. All right. Anyway, space for a daily lower high. Anything under 131.26 is going to be good for one. And weekly higher low, kind of running out of space here for a higher low over 90.69. And again, you know, if you look back at what happened back there when we were looking at that break, you know, what happened, right? You got caught up at supply. So there is the potential now that if we bounce from here, right? Bounce from here, can't get over here, okay, that's going to increase the potential that we do come retest this guy, which would again increase the potential that they trade through it. So we have to be very mindful of this overhead supply here. All right. So that's it for NVDA. Moving on to Bitcoin. Again, Bitcoin, I'm not so interested in it now because you are finding acceptance under here. Last week, we were talking about a potential buy back over this, pass back over this structure if you were to get down to it. And that was fine. I sent out an alert to our group to let them know, hey, listen, if you took that weekend trade, this is where you want to be exiting. I think I got it over here. Over here, I just added a little comment into the where I posted the video, just saying, hey, listen, if you guys the chop of the BTC play mentioned in the video if you took it, right? Because at that point we were testing the value area high, right? And that is the first place where the buyers are likely to have problems. So they did have problems there, and then they rolled over, and now you're finding acceptance back under this guy over here. So that's really it. Like that's really it. So this guy is the key demand zone. 49102.29 is really the key level to hold over. You can see how the buyers held it over here. As long as you're holding over this, then we can expect balance like this. But this balance is not really constructive unless you can get back over 61003.36. So I'm back to hands off for Bitcoin and crypto. It's just not really interesting of a space right now. And that's really it. Space for daily lower high under 59825.70. Anything under that's going to be good for one. And if you're a seller, it's pretty reasonable to be looking for a sell here like this, right? Looking for a potential rejection now to come back down here, right? That's probably what happened here. I'm not sure. Let's take a look. No, it just drilled right through here. But at this point now, because there is all of this supply from all of this chop, because we know that this is the key structure here to stay more or less healthy, because we know that there is a lot of space for a daily lower high, something like this makes a lot of sense for a potential sell. Did they change the color? They changed the color of this? Oh, okay. Something like that makes a lot of sense. All right. Just looking to get back down here. Moving on to Ethereum. So Ethereum, I also don't really care about it, right? Like it's just chopping around. It's really messy. You look to the left and there's a hot mess over here. There's a hot mess over here. You know, that being said, as long as you're holding over this guy, it's constructive. So right now, I would not really say that they're being too constructive here, right? Why this guy? Because this guy was the launching pad into this all-time high leg. And it tries to be supportive here. It tries to be supportive here. It's more or less makes for the highs throughout all of this area. It's clearly problematic here. This guy, the high of this structure, right, was supportive of price throughout all of this consolidation near the all-time high. And now we are back within it. So doesn't look good, and I think also reasonable to look for a sell, something like this, very reasonable. I'm just scratching a wasp sting. Did you know that a wasp sting will become itchy afterwards? Man, that sucks. It hurt so bad, and then it got me 3 times, and then followed me home in my sock. But yeah, I figured after the pain subsided that we would be done with it, but no, it turns into like a super mosquito bite for like a week. It's still going strong, so I don't even know how long it lasts. Anyway, freaking wasps, jerks, bunch of jerks. Anyway, yeah, I think this is very reasonable, right? Essentially, you're looking for the opposite of this kind of a play here. So basically, looking for a potential weekly lower high. There's space for it. Anything under 2820.86 is going to be good for a weekly lower high. And that is pretty much it. Yeah. Moving on to CCJ. So CCJ pop and drop at this daily no change level. Now we're back under this major point of control. This major point of control is the POC of this big guy over here sitting at all-time high, which was affirmed over here, and I would say affirmed over here. Definitely affirmed over here. So I'm still looking for the potential that we balance within this big structure, right? And I wouldn't even be surprised if we crack back down into this guy, right? Because this is really the key demand zone. This massive block of demand over here on the weekly time frame looks like this, right? So just a whole bunch of demand that was created over here. I'm interested in plays over here, especially if we can get weekly oversold conditions. Let's see the last time we got weekly oversold. It's been a while. Last time we got weekly oversold was all the way back down here. Before that was in August 19, so it actually took one more lower low. Here's another decent bounce. Here's another decent bounce off of weekly oversold. So that would be perfect. You know, I would be very interested in CCJ. Another one that I've been working for quite some time due to one of our members, Red Devil. Shout out to Chris. Put this on our radar. Actually, Systemic Risk, I believe, was the first person to put it on the community's radar. But, you know, Red is covering this thoroughly as well. So anyway, that's what I'm primarily interested in. I just want to see a little bit lower, get things extended, get the daily oversold, get the weekly oversold, and then I'll be interested in a play down here for CCJ. And then finally for MSOs, again, you know, I'm only covering this because we have a bunch of folks who are really, you know, diehards for the marijuana sector, but there's really not much going on for MSOs. It's just big old balance here over this potential black dirt breakdown structure. We gap down into this guy again. We've already come into the trade zone once, twice. This is the third time now, looking for some potential bounce. And it's a bit of a red flag that these buyers can't get back over 8.32. So, you know, I don't love it. Yeah, I can't lie. I don't love it. And, you know, again, the only reason why I'm still covering it is because of requests for it. And nothing really has changed, right? As long as they don't, if you can keep holding over this guy, then buyers are still playing defense. But they have to get over 832 to start negating some of this change from this breakdown. And that's really it. I still think this is a very reasonable trade zone, but you just want to wait for there to be extension. Okay. So that is it. Oh no, I'm sorry. We got to do like the swing report stuff. Okay, so for show and tell is Tesla. Tesla is not looking as great as it was on Thursday, but it's still a show and tell that I think is good. So give you a little bit of peek into what the swing report entails. And so for Tesla, we initiated this trade on August 13th, buying the pass back over the prior session's high. And original trade zone looks like this. This is like a longer, bigger term trade zone. So even if you were to use the trade zone completely blindly, not using the alerts, not using these updates that I send you guys, you're still fine, right? You came into the trade zone, you have plenty of opportunity to take some profit. You can throw your stop under here, you can throw your stop under here, whatever. And so based on the alerts, you can just pause this if you like and review the alerts. So I'm just going to talk about it now. I'm just going to talk about it now. And yeah, so the idea was that they should be trying to get all the way back up here, right? These buyers should be trying to make their way back all the way through this guy after holding these two structures here. So that was the trade, that was the idea. And what we did instead was a more active approach. It's not what I normally would do, but it just, the opportunity was there. So I bought the on this day, on again August 13th, right? August 13th, bought the pass back over August 13th of the prior day's high. And then chop it up at the gap fill, chop it up at this low here. And then after I saw this breakout to a new higher high, I walked the stop up to here. So now there is just no way that we can lose anything on this trade. At worst, we're looking at something like this, right? So the final exit would be a 1.26% gain after a 7% gain and a 3% gain, never risking more than 1.37%. So because the risk was so low, we got pretty good size on it. So that's pretty much it. That's what you can expect from the swing report. Again, the swing report is just 2 novel ideas every single week. I'll update you on all of the old ideas as well. Any trades that I take, I will publish these updates for them. And oh, you know what? Really quick shout out to Rich as well. Rich is one of our older, not older, but he's been around for a while as well. And he picked up one of our, let's see here. Let me just copy this over here. Oops. Not sure why that's not working. Okay, let me just drag this over. Huh. Not sure why that. Okay, let me just drag my conversation with them over. So, all right. So again, we want to teach you how to fish, right? And so I actually didn't take this trade KMX, but the setup looks like this for the swing report. And he took the trade on his own accord, and that was great because I missed it. I was actually looking for a more conservative entry. I wanted to see another higher high unless he followed through, and then I would have sold the pass back down under it. But that didn't happen. So he just messaged me, letting me know, hey, listen, he took that trade. This was on September 5th, and just looking for some feedback. Where would you close out more of this position? And I responded, okay, well, we're either going to be here or no later than here at this low, right? Because the sellers, think about it, what should the sellers be trying to get done right now? They should be trying to take out this structure. So shout out to Rich. I really love seeing people, work on the craft, improve. And yeah, so that is pretty much it. If you made it this far, we would very much appreciate a like and subscribe. Costs you nothing, helps us out a lot, lets us know to keep making content like this, actionable content. And that is pretty much it. So I appreciate you guys sharing some of your time and energy with me. Hope you enjoy the rest of your week, and I hope to see you next week. Farewell.